Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is D.I.Y and welcome everybody once again for another amazing video of DIY investing. For today's video, I wanted to dive into even more analysis with the macro trend of Bitcoin and talk about how the halvings actually have a huge impact on the 4-year cycle theory. Yesterday's video, we dived really deeply into the 4-year cycle theory, gave you guys some of my exact reasons on why I think that this summer sell-off is exactly like we've seen up to this point in all prior cycles. So for today's video, we're going to be diving in and focusing in on the halvings that happened. We just had our third halving happen last May. We're going to dive in. I'm going to be sharing with you guys some insane patterns that are going to show how correlated these halvings are to the 4-year cycle theory. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these awesome videos like the one provided for you here. And make sure you guys sign up and join the Discord server of over 20,000 members and growing. Links are provided for you in the description for those that want to join my community. On top of that, if you're new, getting into these markets fresh off and you made a lot of mistakes or you got wrecked in the sell-off, I have a link in the description that's going to give you guys my free ebook. This is going to be a beginner's guide to teach you guys some of the most important basics to understanding how to be profitable. So links are in the description and I made it free to download. And with all that being said, guys, let's jump right into this amazing video today. Now, if you guys remember in yesterday's video, we briefly talked about the macro trend of Bitcoin and we explained roughly how the 4-year cycles are lining up, how they look pretty much the same as what we've seen in the last few cycles. And I summarized my thoughts on why I didn't think that the cycles were lengthening. Now, to further my analysis, I wanted to share with you guys a couple little things that have to do with the halving inside of Bitcoin. So here's a little chart that I've actually gone ahead and made for you guys, and this is going to cover and summarize really the halvings in Bitcoin and a really interesting pattern that I found that pretty much puts us, once again correlated with this end of the year time zone for taking a profit. Now, a lot of people are on the fence about whether the cycles are actually lengthening, whether this is just going to follow the 4-year cycle, or whether maybe this is going to be a front running and the institutions are going to sell early. Now, to be quite honest, guys, I honestly think that we're going to continue to follow the 4-year cycle theory. I personally don't think that this is a super cycle where we're going to have an extended bull run that's just going to go magically longer than all the rest of them. In my opinion, that to me doesn't seem right. It doesn't seem probable. And what I think is a little bit more probable is that institutions have been accumulating since 2018. They accumulated this entire dip. They accumulated all throughout this period of time. And now, as we get to our next big rally, they're going to take profits. They're going to sell, and then we're going to get the cycle top. It's going to end up being the exact same as all these other ones. We get a year-long crash, maybe 85% from the high to the low, and then we'll restart the cycle over again. That's really what I'm going to be watching out for. And with that being said, guys, I wanted to share with you guys a really neat pattern that I found. And this is something I've talked about slightly on the channel, not a lot. Most of you guys will probably have never even heard of this. So I want to take some time to explain it. So let's go through here and really just explain what this analysis means. So as you guys notice, there's 3 black lines in here. If you guys are not sure what those black lines mean, those black lines represent the halvings that happen. For you guys that maybe are new, don't really know what a halving is, every 4 years, the total amount of new Bitcoins that are added to the supply based off of the mining reward, because you guys got to remember that the only way Bitcoin's transactions go through and are processed or because of miners that are processing those for us. And so these miners are taking their big mining rigs, they're solving all these complex equations to basically crack the code and get the block figured out enough to get the reward, right? And so when they do this, every single time they crack a block, they figure out the code, and then that gets all the transactions processed, they get rewarded Bitcoin. Every 4 years, the amount of new Bitcoin that gets rewarded to the miners gets cut in half. So back here, it was something around 50 or 60 Bitcoin. Here it was 12 and a half. Now it's 6 and a quarter. And so every 4 years at this black line, we get this halving that takes place. And every single time we have a Bitcoin halving, what happens to the price? Well, this was our first halving. Price immediately skyrocketed. This was our second halving. Price immediately skyrocketed. This was our third halving. Price immediately skyrocketed. So as you guys can see, there's a very obvious pattern that's played out. This is nothing new. If you guys have been investing into crypto for a while, you already know that we were always expecting this. It's nothing new. I'm not some genius for pointing this out. We all knew that once the halving takes place, it creates a supply shock, and the price of Bitcoin has to rise for mining to continue to be profitable. And so what I wanted to share with you guys, really the pattern that I wanted to show you guys, is right down in here. So if you guys notice that there's these time frame tools. Now, where I've actually gone ahead and drawn these lines takes place right there and takes place right here. So if you guys, let's actually draw this one slightly over because it's not quite accurate. So if you guys notice here, I basically drew these from the low of the move, the very bottom of the bear market, all the way to the top of the bull market. And I've gone through and I've really just measured from the bottom of the bear market to the halving, and then I've gone from the halving to the top of the bull market. Now guys, this is a really interesting pattern because what it perfectly shows is that the length from the bottom of the bear market until the halving is the same length of time as the halving until the top of the next cycle. And so what we're seeing here is this perfect little flip that takes place. It reminds me a lot of this price action right here. Notice how it's kind of like this synchronization of price. Price is going down, and then all of a sudden it goes sideways, and then it just does the exact same thing on the opposite side. It pretty much just repeats this in the opposite way. And it goes through this consolidation pattern, and it's this equilibrium that eventually reverses it and makes it do the exact same thing except inverted. The same thing happens here with the halvings. We have this down market, right? Once we find the low and we measure from the low to the bear, or from the low until the halving, and then we measure from the halving until the high, it's almost the exact same time frame. This is almost exactly 1 year from the low to the halving, from the halving to the high. It's almost exactly 1 year's time in between each. This is a really cool pattern that I noticed, and it's actually fractable on every single cycle that we've had up to this point. And what we can see right here, we bottom here, let's draw another line. We bottom here, January of 2015, right? We top here. A little bit longer than it normally was. So they're not 100% exact, along just as exactly the same as with the 4-year cycle theory. You're gonna have about a month or two of a little bit of a difference in the time frames, but more often than not, they're always gonna be almost exactly the same. And that's what's really crazy, guys. If you can give me a time frame, if you guys can shoot in the dark, pick a time frame randomly within a 4-year time frame and say it's going to be within 2 months of this time frame, 4 years in advance, you're never going to be accurate in that assumption. So how crazy is it that Bitcoin actually does follow these 4-year time frames within a couple months of a difference? It's really, really correlated. And for the people that can't see that, I mean, they're simply just going to miss out. And so guys, if we take this same pattern, let's play it out once more and see how it plays out. So remember, we go from the bottom of the bear market, so in this case right here, bottom of the bear market until the halving. That was about 546 days. Now, once again, we go from the halving till the top of the bull market. And this was about 525 days. So it's about a little bit less than the first one, but pretty much once again, right on path. This first one here was a little bit longer than the first half. This one here was a little bit shorter than the first half. Regardless, we can still know that had you have just known this basic pattern, you would have ended up selling a tiny bit late. You would have sold the Bitcoin at probably about 16K rather than 20K, but regardless, guys, how'd you known that? I mean, there was people that ended up buying all the way down here at, less than $500 per Bitcoin, selling it at less than 5,000, and they missed out on a ton of profit. Had those people just known this basic pattern, they would have been able to outprofit the vast majority of the market by far, hands down. Now, once again, guys, let's fractal this pattern out again. Let's see if it plays out. So once again, we're going to go from the bottom of the cycle. And this one obviously doesn't have a top of the cycle, and so I've just labeled them the same distance, right? They're the same time frame. So this one could be a little longer, it could be a little shorter, we don't fully know. My guess is that this one would be a little bit longer. The same way that this latter half was slightly longer than the first half, And then the same way the first half was slightly longer than the second half, I think that this second half will be a little bit longer than the first. Just because we didn't really have a lot of consolidation throughout this period, I think it's going to make a little bit more sense that we'll get a little bit of an extended period in this final move that's going to take us closer to the end of the year. Because as it stands right now, the way that the time frame stack, this shows a projected cycle top at about the 11th of October. So we're pretty close to those same time frames. We're a little bit earlier, which is why I personally think that we're going to go a little bit later than 518 days. Maybe we top at 530, 535, 40, something like that. Regardless, guys, I think it's really cool that when we can take a look at these different variables, we can really input these data points. We can see that not only do they follow the 4-year cycle theory identically, but we can just simply analyze the halvings alone. And with off the halvings, we know that we can get pretty close to an exit point within a couple months of a window. And that's really all that matters, guys. We're not going to nail the exact top. We're usually not going to nail the exact bottom. But if you can buy relatively close to that bottom and sell relatively close to that high, you're going to be doing better than 90% of the people out there. And so that's a win. You should really just look to make the majority of the move, because you're never going to get the whole entire thing. If you try and go for the whole thing, you're just going to get greedy, end up missing out on your exit entirely, and having to hold through the bear cycle, which is not fun. I've done this. I've telling you guys off of firsthand experience. It's just really interesting that I've been able to find this little pattern, and I didn't find it. I found it on Twitter a while ago. It just reminded me to look at it after yesterday's video of us actually looking through the 4-year cycle, because when I was looking at that 4-year cycle, I just started to realize, man, these cycles look so much the same. I mean, the first half of the cycle, you get this little lead up until the halving. The second half is really just the big rally up. The same thing happened throughout this period. Slow rally, then we get the big impulse after the halving. Same thing happened here. This recent cycle was a little bit different, but once again, it still follows true. I mean, instead of getting 2 little impulses, we got 1 big impulse that was about the same as the first 2. Same thing here. 1, 2, 3, 4. 1, 2, 3, 4. This one was just a big 1. And so it's really following exactly the same as all the other ones. There's really no difference here. We're just in this next big mania phase in this cycle where we're going to get one more big rally. My target's always been about 250K. I've been calling for 250K for a long time. Guys, this is no different than anything we've seen. Are we going to get a cycle top around October? Who knows, guys? Regardless, I'm just trying to share with you how many different data points support the thesis that we're actually going to be topping at the end of the year. Not that the cycles are lengthening, because you guys can get the cycles are lengthening by analyzing the macro trend of Bitcoin. Because if we come all the way back here, this cycle was a lot shorter than all the other ones. And so there is obviously a case to be made for the lengthening cycles. But the thing is, guys, this cycle hadn't even had a halving. There was no liquidity in it back then. I don't think that that's a formidable approach to put enough of your weight inside of that analogy. I just don't think it's very logical for me anyways. But when we actually take the time to analyze the halvings, now that we've had 3 halvings, up to this point, we've followed this pretty identically. And so I not only have the 4-year cycle theory that's providing tons of data points signifying that the end of the year is going to be the cycle top, but we can also take a look at the data points with the halvings, and we can also gain another bit of a thesis that says, hey, the cycle is going to be topping the end of the year. Get out late fall, early winter at that point. So anyways, guys, this is a video I had for you. Just wanted to share with you guys some thoughts and perspectives on these cycles, really just taking the time to zoom out. With the markets down, with the markets correcting a lot, it's really, really emotionally trying. But for the people that can just zoom out and realize that this is nothing new, that we just have to hold through this dip, or if we're going to be buying the dip, that's all that needs to be said for us to be profitable. So thank you guys so much for watching. Leave a like, comment, and subscribe to this channel if you found value in this video. If you guys want to join the Discord server, or if you guys want to download my free ebook, links are also provided for you in the description for that. You guys can also join my video course and signals, get in my private Discord server, follow those trades, get that educational content that you guys are looking for. Links are also provided for you in the description for that. Thank you guys so much for the support. And with all that being said, I will catch you in the next video. As always, peace out.